Hi, I'm John Persinos, Editorial Director of Investing Daily. Welcome to my video presentation for Monday, May 23rd. Equities have been sliding, and the S&P 500 is within striking distance of a bear market. But the market could be approaching an inflection point. Has the market bottomed? Trying to time such occurrences is always risky. But if we haven't already seen capitulation, we're darn close to it. Take a look at this chart. It's the S&P 500's performance since its peak on January 3rd. And keep this in mind. Over the past 5 decades, the stock market has racked up an average return of 17% in the 6 months after the market bottoms. Consider the last 2 major market downturns, in 2018 and 2020. During both scenarios, markets rebounded strongly and fairly quickly. As I'll explain in this presentation, we could be witnessing conditions for a similar recovery in stocks. That said, equities continued tumbling last week. Take a look at the following table. Wednesday represented the largest one-day decline in the S&P 500 since June 2020. Stocks fell for the 7th consecutive week, with the S&P 500 down about 18% within a whisker of a technical bear market. The tech-heavy Nasdaq already is in bear territory. International stocks, as measured by the EAFE, have been under selling pressure as well. Investors were spooked by disappointing quarterly earnings reports from bellwether retailing giants Walmart and Target. Both big box chains missed on the bottom lines due to pressure on profit margins from higher labor and input costs. But therein lays a contradiction and also a ray of hope. Consumer traffic remains strong. Despite rising inflation, the American consumer hasn't pulled back. Retail figures for April were robust. It's true, consumers are tilting toward bargain brands and stores these days to combat higher prices, but the problem in the retail sector derives on the supply side and not with consumer demand. Investors seem to be interpreting the latest retail operating results as canaries in the coal mine. The consensus is that more pain is to come. But in this particular investment movie, the cavalry in the form of the Federal Reserve won't be riding to the rescue of the stock market. Fears of higher interest rates, recession, and runaway inflation have put Wall Street in a punishing mood across the board in all sectors. Companies that have reported negative earnings surprises for the first quarter of 2022 have suffered an average share price decrease of 5.4% 2 days before the earnings release through 2 days after the earnings release, according to research firm FactSet. This percentage decrease is considerably larger than the 5-year average price decrease of 2.3% during the same time frame. But aside from the numbers, it's always wise to closely observe earnings conference calls. What managers say about the future is important, and on that score, I'm encouraged. Notably, in calls with analysts, CEOs at the major retail stores reported that they expect foot traffic in the summer to be stronger. They also expect supply chain disruptions to ease. The retail stocks that got clobbered last week now sell at deep discounts. This is your chance to scoop up intrinsically sound equities for low valuations. I continue to see a litany of positives: a resilient consumer, low unemployment with rising wages, and solid corporate earnings growth. For Q1 2022, the blended earnings growth rate for the S&P 500 is 9.1%, according to FactSet. Here's another positive factor. By front-loading its rate hikes to combat inflation, the Fed has given itself wiggle room for rate cuts when it appears that inflation is easing, which in turn would serve as a catalyst for an upward surge in stocks. I advise putting together a shopping list of stocks that you've wanted to own but were too pricey and cautiously build positions. Where can you still find these growth opportunities? I can sum it up with a single word: takeovers. Even the hint of a major corporate merger can generate outsized investment returns. My colleague Nathan Slaughter, Chief Investment Strategist of TAKEOVER Trader, just pinpointed a mega merger in the offing. When it comes to anticipating takeovers, Nathan is the savviest analyst I know. For details about Nathan's latest trades, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for today. Thanks for watching. This is John Persinos advising you to stay invested.